Hey guys, it's Mr. Miles and welcome back again to my YouTube channel. If you're new to this YouTube channel, just don't forget to subscribe and you just hit the notification bell so you don't miss any of my videos. In this channel, I do make videos about Forex trading, how to be consistent in the market, because that is really our goal, guys. We're not after gambling, making a lot of money, and tomorrow you lose the money. The most important thing is how you can benefit in the business and how you can always remain in the business and be comfortable in the business. I was speaking to one of my friends today and he was telling me that, hey man, Forex has been so stressful to me. That is what we are trying to fight. We just have to enjoy the business, and that is what I'm up to, guys. Okay, so if you're new to this video, just do it, man. Subscribe and like the video if you of course love it. Okay, and then you can share to your friends if you also wish that this channel can grow and we help a lot of people. So today I'm gonna be talking about the market structure. Okay, the market structure. Okay, the question is, what is the structure of the market? Okay, if there is something that you should always pay attention to, is the structure of the market. I promise you, you're not gonna be making any money in Forex unless you understand a few things. The first thing is the structure of the market. Another thing is understanding how to really manage your risk. Another thing is understanding the trend of the market. Then another thing is understanding, of course, the candlesticks part, because the candlestick part, it really demonstrates and shows you the behavior of the market and also the reaction of the buyers and sellers in the market. But you know what I'm going to be doing today? I'm also going to be showing you about the real market structure. What is it and how it can really help you do it. Okay, guys, so this is Euro USD that you can see in my charts, and I'm going to be using it as an example, and I'm going to be explaining about the structure of the market. And as you know, we have very many different structures of the market. You know that. Different structures of the market. And I want you to do one thing. I'm not going to tell you to just cram and paste things. That is what I hate so much, and that is what it's very hard that you can make money in trading just cramming and pasting. You have to understand the structure of the market and what is the next move after that structure of the market. Okay, guys, so let me give you an example here that I think it will really help you. In structures of the market, we have so many, and I'm going to name them all. We have something like M structure, which people mainly know it, and people have crammed it in a way that when you see an M structure, maybe a price was moving up, okay? Price was moving up. Then from nowhere, you see an M structure, and it breaks this point even, okay? People tend to say price can retest this point, then price can come back. Yes, there is a high probability that price can do that. I can say that a probability of 70%, but there are more things that you can equip in your trading that can give you a guarantee that you're in a right trade, okay? Take, for example, your accuracy is 90%, which is so better off. And if you just make sure that your risk management is also better, then it's going to be very easy for you to profit in the industry. So let me give you an example of this, and I'm going to be explaining slowly, bit by bit, of this M structure, okay? So just listen to me here. So let me say it's an uptrend. Of course, you know, an uptrend is something like higher highs, a series of higher highs. Okay, price is moving high. The reason why price, this our resistance and this our support, resistance, support, resistance, support. So let me explain this. If this is our resistance, the reason why price, like, you know, price cannot move straight, as you know, guys. There is always a point. Let me give you an example. Take, for example, price is moving up. Okay, as price is moving up, it means that the buyers are so strong. But at some level, of course, in this price moving up, there is also a rejection from sellers, but buyers are so strong, so they automatically have to push the price. As price is going up, also they keep on weakening, you know, they keep on weakening. So they're gonna take a rest. Let me say they're gonna take a rest, and that becomes our resistance point. Then they gain from this point, okay? Like sellers try to push in again, but they'll also be weak. They won't take further. So then let's say the sellers gain from the buyers gain from this point. That's why we call it a support point. It gives them more support to push price to the next higher high, then again a rejection, then the same thing continues. But I'm gonna give you one thing that I want you to understand. You see, if you want to know that price is really moving up, okay? You'll find that the length from here up to here is longer than the length of the rejection. Of course, these are impulse, the right trend, then a rejection. So you'll find that this rejection is always shorter, but the real impulse is longer, okay? It means that the buyers are really in the market, but at some point, they're just trying to take a rest and grab more support, then push it up again before the sellers can come with that short resistance. That's why I'm telling you that this point from here to here is always shorter than from here to here. That is the main impulse. The main impulse has to be long because it gives the direction of the market, the trend of the market. Okay, so that is the real direction of the market. And so the rejection is just shorter. So what I'm meaning is, I mean, this is our resistance point and this is our support point that the buyers are gaining more strength to move up. Okay, then we are moving up and from nowhere, we're forming an M structure. Know very well that as price reaches this point here, we call it support. Then from here to here, we call it is shifting the market structure to the next higher high. Let me repeat it again. Pullback, support, gains a lot of the buyers gain momentum to push price to the next higher high. So we say the buyers have gained momentum and enough support to push price to the next higher high. Then we get our resistance here. They do the same thing. Okay. Now let's say price reaches this higher high here. Okay, then instead of a pullback, yes, it pulls back, but again, price fails to make another higher high. Okay, so this point becomes kind of like a very strong resistance point to be broken. That's why I'm gonna mark it. I mark this always that price. Okay, I always mark that price. Anything can happen. Price can still even negotiate and then still move up, but it will take some time. It will take some time, okay? So it therefore means that at this point, price has failed to make another higher high and is just ending the same previous high. That's why we come up with a structure of M structure. Price is failing to break the previous higher high. It means there is something happening, guys. Even after the pullback, price cannot break this higher high to make another higher high. Then there is something happening. It means that the sellers are also kind of very strong in the market, okay? So at this point, you'll always see rejection of price, okay? Like stop hands, rejection of price, meaning that the price is like, this is our strong resistance zone now. Yeah, this is our strong resistance zone now, okay? Strong resistance zone. Then if price rejects this point so many times, it means that the sellers are gaining more momentum. When they take it down, they're going to take it so fast. The more they delay, okay, the more they're gaining more strength and take it down. You get what I'm saying? So this is just our strong resistance point. That's why people say that when you see an M structure, you sell. But you're not going to cram and paste like that. You have to understand the level of the market because price moves in levels. Do you know what, guys? The reason why it is so nice to always trade a specific pairs in trading Forex is because when you trade like 3 pairs, you'll always understand their levels. When the week closes, you know that, hey, Euro USD ended in which level? And you know, this weekly cycle repeats itself, man. This weekly cycle repeats itself. And one of the good things is that, guys, if you want to be part of my bootcamp Zoom, private Zoom, you can just check my WhatsApp number below the description, or I'll just pin a comment. Then you can just WhatsApp me, or you can also just email me direct. Then say, Miles, I want to be part of it. What can I do? Then I can direct you what you can do, so you can be part of the private class and enhance your trading with me. And we can see how far you can go trading Forex and enjoying this industry, you know. So that is how the structure of M structure looks like. So let me add more. Let me give you this. Okay. I think I'm trying to see some light in Euro USD. This is Euro USD. Okay, this Euro USD. If you look at Euro USD, guys, I want you to look at Euro USD very well. Look at it very, very clearly. Very clearly. Okay. Higher highs. It's an uptrend. Yes. It's moving high, okay? Even after price breaking this zone here, okay, it break market structure, it still goes back. That's why I'm telling you, don't cram something. Making another higher high, okay? M structure failing, goes back another higher high. Then we reach a point, at this point here, at this point, if you look at this point here, guys, something like a head and shoulder. I hope you can see that, okay? I hope you can see that. So it is our strong resistance zones. Let me grab that. Strong resistance zone. Strong resistance zone. It means that price is respecting that point, and there is a high probability that price might not break this point. Why am I saying so? Let me give you an example. Okay. We had a double M structure here. Price comes back, makes a small higher high. There is no big move here, after this higher high. Okay, we expect price to make another big high, something like 20 pips above this point, but price makes a small higher high, comes back and breaks this point. It means it has already broken the structure of the market at this point. Retests back to the same point like a shoulder at this point. Okay, so that point I'm going to mark my price. Okay, then if you're patient with this trade, I promise you, if you're always looking at the structure of the market, understand it in high time frames, and you hold your trade, manage your risk, you will enjoy trading. To be honest, trading is not something that you're going to be waiting for. You enter the trade and you're going to be up and down waiting for. You always have to have a target in life, Even in life, you always have to have a target. You cannot just go, okay? You cannot just go. You just always have to have a target. You're targeting 70, 80 pips, 65 pips, and your stop loss is 20 pips. You have a great target there, and you always have to be patient for your TPs to be hit. Price is moving in a pure profits of 20 pips, and you're already closing it. Your stop loss is 20 pips. Why can't you just trail, man? Why can't you trail? That's already a safe trade than being impatient and you close a trade in 20 pips, and then trader moves to your point. You lose something like 40 pips. Next time price goes against you, you lose it. Your account is not going to grow because you don't have a target. If you don't have a target, whether you have what type of strategy, you can never make it in Forex unless you always have a target. So what am I trying to say, guys? Understand the structure of the market. Don't just cram them that when you see an M structure, you sell. No, never. Let me give you an example. I've told you about the shift the market structure. And if this our higher high, price fails to make another high, then it means that is already our resistance. Like there is a strong zone there. Something is happening there. Try to think about it. Then price comes and again breaks this point. When breaks our previous support, hey man, breaking our previous support, I think that is going to be something like BMS. It has broken the market structure in the same structure. Yeah, let me give you an example. When you see this, this is always our support to the next higher high. But price is failing to even pass this high. It means something is happening. Okay, the buyers are getting weaker. I'm talking about only an uptrend here. The buyers are getting weaker. So what are we gonna do? Price again comes back and again breaks our previous support, which was supposed to be our support to shift the market level, the market structure to the next higher high, but it's failing. It's breaking this support level, and when it breaks this support level, then we call it break market structure. This structure of the market has been broken. Am I lying there? Yes, we had M. M is supposed to end here. We write M like this. I think I'm right there. To me, I write M like this, to be honest with you guys. But now if this M again comes like this, then a candle closes below this point, then I'm up to something like RTO. Then I'm changing my direction. But I don't just change the direction. When this happens, I look at the level of the market. I look at the weekly chart. If I see that facing the same direction, then I'm going to trigger it, man. I'm going to trigger it, and I just put my stop loss and I put my take profit, and I be patient with the market. When I be patient with the market, then I'm going to crash it. If I crash low, then I will lose low. If I make it, then I will make enough. You get that? It will compensate my trades. You're making 70 pips, you're losing 20 pips, that's a good ratio. That's a good ratio. Good ratio. Would proper, like if you understand the market structure very well, understand levels very well, understand key points of entry, very important, very important. When you make your entry so sweet and nice, the more it becomes so easy for you to make the money. Okay? Understand the direction of the market. Don't trade against the direction. Simple rules, simple understanding, and you make the money. Understand the direction, understand where you're going, it becomes very easy for you. Understand your risk management, understand it, and trade slowly. Avoid stress. When you trade slowly and use proper risk management, you limit stress in your life and you enjoy trading. You know, you can never make money in something that you're not enjoying. It means you're forcing yourself. Ask yourself, why are you losing? Okay. Today you're using a lot size of 0.05. Tomorrow you're using a lot size of 0.10. What sort of trading is that? Same account. You're not going far. To be honest, yes, you'll make a mistake and you grab some pips at once. Then you're gonna try to risk the same way. Then it brings you back. Let me show you the curve, the way it moves like. You risk, you make a lot of money. From this point, you shift, maybe you double your account. That's why I don't like anything flipping accounts. I don't believe in that. I believe in growing slowly. Okay. Then the next time you risk, it pulls you down, small equity, your account is less now. Next time, boom, you've blown your account. Simple story. You've blown your account. But when you're going slowly, you go slowly, you go slowly, the way market moves, you get stagnant here. At some point, you get a break, you move slowly and you grow. You grow. When you're losing, you're losing something like, let's say, a bearish flag, you break it. Your account is growing. That is how we trade Forex. The way the trend moves is the way your account is going to grow. The way a trend moves up is the way your account is going to grow. It's not going to grow straight. It grows slowly. These are your losses. These are your profits, long, the real trend, your losses. Okay, you get stagnant at this point, a ranging trade. You break it. You've grown your account. You start increasing your lot size, but always risk 2% or 1% of your account. Then you enjoy trading. But if you trade just very fast like this, you'll always lose money and you'll get disappointed and you'll say trading is hard, yet the business is actually simple. I told you, if you use proper physiology, then it's gonna be very easy for you to make the money. Well, guys, I wish you the next time. I'm still talking about the structure of the market. I'm gonna be making more videos about the structure of the market. I'm gonna be explaining to you how the dealer uses the structure of the market to manipulate you and to put you in a condition that you'll start fearing. Okay, for this time, I'm gonna wish you the best. And if you're struggling for the broker, guys, just check below this description and click the link of Hot Forex. Click that link and open yourself an account. You win yourself a bonus, but only if you're from Africa and excluding South Africa. Click the link and open yourself an account, grab yourself a bonus and trade very well with it. It's a very cool, trusted broker and I trust it and I also use it. Okay. Another thing is that, again, you can also click on the XNES account if you're in Asia and also in Africa. You can grab yourself a bonus and trade using XNES and Hot Forex. Those are cool brokers that I can advise you. If you're from UK, grab IC Markets, guys, and trade very well. I wish you all the best. Don't forget that you can join my Zoom private class and learn with me and trade with me and make your trading comfortable and enjoyable. I wish you all the best. See you in the next video, guys. Have a blessed day.